Welcome back to Bazaar Morning Call. So this market has been so very range bound, which gives us some time to ponder over individual stocks. Here's our entire team joining in to help us with that list. First up on our radar is Union Bank. Abhishek is here to tell us why he's watching that one. Abhishek, good morning.
Good morning, Sonia. So, Union Bank of India has launched a QIP that is up to rupees 5,000 crore. The base deal size is about 2,500 crore, and based on the demand, it can be scaled further by 2,500 crore. Indicative price is about 86.55 per share. Now, this implied discount to SEBI's floor price is about 5%, and to NSE's closing price is about 5.7%. Now, calculation shows that if at all they raise 5,000 crore completely, net worth will increase by 6.15% to about 86,364 crores. Equity dilution is about 8.5%, which means that the government of India's stake can come down to 77% from 83.5% that it is there right now. Tier 1 ratio increases by 30 basis points to about 14.16%. However, book value declines by more than 2% to about 116.5 per share. Back to you.
Thanks a lot for that, Abhishek. Well, let's hop across to Nimesh. He's here to tell us about an SJS Enterprises block deal that is expected and Shriram Properties block that took place yesterday. Morning, Nimesh. You gave us a heads up about this one, the SJS block. Tell us more.
Hi, Nigel. So, 30% equity is going to change hands in SJS today via block deal. So, the promoter entity, which is Evergraph Holding, they are going to sell close to 29% stake, and the key managerial personnel is going to sell, which is Sander Consulting. They are going to sell 0.5% stake. The floor price the indicative floor price is 580 rupees per share, which means a 6.5% discount to yesterday's closing price. Now, after this block deal, Evergraph will be still holding 14 lakh shares, which they have a lockup till the 10th of November. But in a large block, nearly 30% equity is going to change hands in SJS Enterprises via block deal today. So that's the first one. The second one is Shriram Properties. Now, yesterday there was an interesting block. Omega Holding sold close to 18 lakh shares at an average price of 75 rupees. Now, there is a large anticipation that there's going to be a large block in Shriram Properties also very soon. Now, this particular entity, Omega Enterprise, they own close to 1.6 crore shares, which is nearly 10% of the company's equity. And maybe they are the sellers, or some other private equity will sell. But for the last couple of months, there has been a lot of equity getting changed hands in Shriram Properties as well. Remember, the stock is still trading below the IPO price of 113 odd rupees. So, expect a large block in Shriram Properties as well very, very soon.
Okay, Dinesh, thanks a lot for that information. Let's go across to Ekta now. She's tracking Glenmark Pharma. Ekta, good morning.
Morning. Well, interesting development with Glenmark, which they've announced. They've entered into an agreement with the US Department of Justice, which is the antitrust division. This is to resolve all court proceedings with the Department of Justice involving historical pricing practices by former employees for a cholesterol drug between 2013 and 2015. So it is basically related to, some allegations between that period of time. The company has entered into a 3-year deferred prosecution agreement. So the Department of Justice will dismiss the indictment if in case the company adheres to the agreement, which also includes a payment of $30 million payable in 6 installments. So $30 million is the overall settlement amount. They are probably closing the issue with the Department of Justice with this. So net, it should be taken positively, considering that the overhang is now removed and the amount that they have to pay is over a period of time and is limited to $30 million.
Okay, all right. Thanks a lot for that, Ekta. Hopping across to Rima. Rima, you're telling us about L&T Technology Services. They had a management meet with MS?
Yes, so Morgan Stanley managed to meet the management of L&T Technology Services, and these are the key takeaways. They're saying decision-making is still slow, but there is a little bit of a pickup in the month of July versus the prior months, but you still have to go through multiple layers of approval. The management also says they expect impacted verticals like semiconductor and high-tech to improve or recover by Q4 of FY24. The management reiterated their commitment of achieving $1.5 billion of a revenue run rate by FY25 2025, so that remains intact. The management has given a guidance on margins. They're talking about margins of 17%, but Morgan Stanley was a bit conservative on margins. Their estimate was 16.7%, but post their management meet, Morgan Stanley believes that margins may have a positive bias in FY24 compared to their own estimate. So perhaps it will be closer to the management's own guidance. Back to you.
Okay, Rima, thanks a lot for that. We'll keep an eye out on L&T Tech. But there are plenty of other stocks that are in the news this morning. So Sonal is here to give us the lowdown. Sonal, hi, good morning.
Good morning, Sonia. Let me start with Brokerage Enterprises. The company has gone ahead. They have bought a land parcel in Chennai, and this is a 6.54 acres of land parcel where they will be developing a residential project. So a lot of real estate companies entering the Chennai market as well. Adani Enterprises, where the promoter has raised stake to 69.87% versus 67.65%. This 2.22% has been acquired from August 7 to 18th. RITES and NHPC, they have signed an MOU for rail infrastructure consultancy works. So these two stocks will be in focus. Ramakrishna Forgings Limited, because they had submitted a plan, a resolution plan for the acquisition under corporate insolvency resolution process for JMT Auto Limited, and it has now been approved by the NCLT. So that is a positive news. For Lemon Tree Hotels, they have signed two new properties. One is in Bhubaneswar, Odisha, and the second one is in Kasauli, Himachal Pradesh. The Odisha project will be operational by Q4 of FY25, and the Kasauli project will be operational by Q3 of FY26.
Okay, all right. Thanks for that, Sonal. Well, let's give you a quick recap of all the stocks that we just covered. Most of them have positive news flow, so let's run through the list. Union Bank, Shriram Properties, Glenmark Pharma, L&T Technology, Brokerage Enterprises, Adani Enterprises, REITs, RK Forgings, as well as Lemon Tree. All of them on the positive side. On the flip side, owing to that large trade we're likely to see on SJS Enterprises, well, that one will open up in the red. Well, Abhishek's still with us. He's joining in to tell us about the brokerage notes that he's read early this morning. Abhishek, run us through the list.
Well, Nigel, to begin with, BOFA has written on Bajaj Finance. They have a buy recommendation and a target price of 8,750 per share. They say that there are multiple levers to support growth, and focus is on diversification for Bajaj Finance. So proactive action on unsecured growth. FY24 target in terms of growth remains intact. A higher cost of funds in the near term, and that could impact, However, access to new liquidity pools will also aid in controlling the cost of funds rise. So the key growth levers is customer acquisition, funnel widening, and new loan acceleration, while product launches and calibrated scale-up could also address the loan growth part. UBS has written on SDFC Bank a buy recommendation and a target price of 1,900 per share. They say that post-merger there are 3 challenges and 3 opportunities. So the key challenges that they say is that deposit gathering, growth, and ROA differential. For merged entity, they estimate 15% EPS CAGR over FY24 to 26, which is 4.5% to 5.5% decline versus standalone estimate. The stock may consolidate in the near term due to uncertainties. However, they expect a re-rating and relative outperformance versus private peers in FY25 for SDFC Bank. Nomura has written on Bharat Forge buy recommendation, target price of 1,157 per share. They say that there is potential to be a leading defense exporter for Bharat Forge. So company has built a sizable defense vertical with a large order book and is getting new orders, which supports their view in witnessing a sharp ramp up in FY24 to 25. So they estimate 20% plus EBITDA margins for defense sector. Back to you.
Okay, thanks a lot for that. In fact, yesterday, Kalyani Strategic Systems bagged that 2 export orders worth 850 crores, and that's when Bharat Forge had hit a fresh 52-week high. Now, a lot of brokerages writing on that development. But let's move on. The other big global headline is the US 10-year yield hitting the highest level since 2007. And that's led to a fall in commodity prices. Manisha Gupta is joining in for a roundup of all the action overnight. Manisha, good morning.
Morning. Oh, absolutely. Yes, Sonia. The U.S. Treasury yield doing all the damage for the commodity prices here. And I'll start with the crude oil prices, where we did see 2% of decline in the previous week. Yesterday was another percentage of a decline. And we are just about holding $80 a barrel for the WTI crude with this one. Not just the crude oil prices, that's the scene across energy markets, where you are looking at heating oil at a 6-month high lows. We are looking at gasoline futures trading at a 2-week lows as well. There is pressure that has come for the metal as well. Apart from the U.S. Treasury yields, it is the China rate cut which disappointed the market. The street was working for the 15 basis point of a rate cut. You only got 10 basis points, and there was no rate cut for the 5-year term loans, and that is what is weighing onto the market. Apart from that, there also is an increase in inventories for copper, zinc, steel, iron ore. At ports is at all-time highs in sense of inventories. That's weighing onto the street as well. There are discounts now on the ground. There is a demand really missing there, and that is weighing onto the prices. We've seen 3 weeks of constant decline for metals, and this seems to be turning out as a 4th week. The last 2 trading sessions have seen declines yet again.
Okay, Manisha, thanks a lot for that. So big fall is what you're seeing in metal prices globally, and that's of course on account of the move in the US 10-year yield. But let's get talking about our own market.